So next up is also really, really interesting. It's Thomas Laurse, who is the CEO and founder of a company called Sobio. I'm not going to take your shine away, Thomas, just don't worry about that. Very early, he actually saw the opportunities within open banking, PSD2, and how to use and understand the data even better to make sure that we as consumers could understand even more related to PSD2 and open banking. And next up is actually open finance. And Thomas has also been in the lab thinking very hard about open finance and how that is going to play part of the future. So without further ado, let me introduce Thomas Laurse. Welcome to the stage, Thomas.
Thank you, Bo, for the introduction. Let's see. There we go. So the next half hour, I will be talking to you about open banking and open finance, two concepts that I hold very dear. I think they are very important to how we will transition as a financial sector to talk to our customers. And I'll talk very much about how this is transitioning the way we interact with our customers, primarily from a bank perspective, because that's what I work with. Before I get into it, just a few words on myself. I'm not going to spend a lot of time on it. My background is in working on the digital side of product development in the financial sector here in the Nordics. The last thing I did before I left was build a PFM, and this was back in 2010. And PFM, so everybody is aligned with what that means, is a personal finance management. Back in those days, we were already extremely excited about transaction data and how we could use that to change the way we communicate with customers, how we could help them understand their finances and become better at interacting with our customers. I did that back in 2010. A lot of banks were starting back in these days. This is some years before we actually get to more of the open banking movement. But I got back to it after a couple of years because I felt that there was something that we were missing when we did these PFM exercises across the sector. Myself and my co-founder, Brian, we started a company focusing on doing something different here. Because what we saw was we had built the PFMs, the sector had broadly developed PFM solutions and implemented them across their digital channels. And it allowed us to do things like say how much money you spent on coffee last month. It allows us to show you how much you spent on transportation. It allowed us to do insights like this one. You spent so much more on vacation this month than the last month. But what we found peculiar and something that we felt needed to be changed was that as soon as we as financial professionals look at a customer, we don't start here. We don't start looking at how much money you spend on coffee. We're not really interested in you had a month where you spent more on vacation because that is just how we live as humans, right? We look very differently at your financial numbers. We are interested in things like disposable income, your capability of saving, things like that, more fundamental values that represent your financial health. So why were we doing something different in the digital channel? We felt that was very interesting and something that could be changed and should be changed if we wanted to have a better relationship with our customers and if we truly wanted to help them understand their financial health and help them with that financial health. So that leads me to the first part, the open banking side. I've set it up as I see it. I believe there are basically two eras. We started out back in 2000 and I would say around 16, 15. We already here had the first aggregators here in the Nordics that allowed us to get access to this data through screen scraping back in the days, right? 2018, we got PSD2 making this really viable. And this was at the same time where we had a lot of innovation. Every bank had their own innovation center, put money into fintechs. Fintechs was a very, very hot commodity. It was easy to raise capital. And a lot of people saw a lot of potential in this data, right? Open banking was all about making it accessible to get insight into the customers, helping the customers understand their data, making it free to get access to. It suffered from some initial issues. One was very pragmatic and basic, is that the data was actually not as easy to get a hold of at a good quality as we expected. These initial years, we really saw very, very poor data quality. We're talking 60 to 80% accuracy. And you can just imagine how well you would be positioned to talk to a customer about their finances if you had accuracy on 60 to 80%. It's basically impossible. And it's because of basic things like payment types is not always exposed in PSD2. The text that you see on your transactions, it's a constructed field based on individual business logics at the individual bank, representing some core data. So there's a lot of work in deconstructing, building up data, and so on. And that wasn't immediately something that we just had access to. Another thing that's important about open banking, and which will change here with open finance, is we were a lot of companies that tried to build something out of this, build business on top of this. Here, 10 years later, we can look back and say it was very hard to find some real business cases. Sure, there was something in the payment space if we should look outside of just the data side of it. The PISPs created account-to-account solutions that has definitely taken some of that away. But on the data side, we really dug hard into this killer app that we were promised with PSD2, this PFM. You'll see in all the literature back then, that was the killer app that we had drawn up. And here 10 years later, we can just see that it doesn't make sense from our perspective. It's not how we would look at a customer, and it doesn't seem that it makes a lot of sense for the customers either. All the customers we're talking to have very, very low percentage conversion on this type of data. On the more open banking side, the actual access to data from other banks, we saw this implemented. And most of you probably have a mobile bank where you can log in to another bank and you can see the account from that side as well. I don't know of how many of you do it, but if you do, you are one of the rare individuals who do it. It's something that wasn't really used. Maybe it's a little special here in the Nordics as well. We do have a tendency to have a primary bank and have passive accounts in the other banks. But it didn't really provide any value. However, everything is not doom and gloom, and if we can move ahead here, I believe right now we are in what I would call the golden age. Over these 10 years, there are a lot of players that have spent a lot of effort in making sure we have a solid data foundation to build on. That has required building up secondary data sources to build meaning, to enrich these data sets that we had from the open banking. But it had allows us to get up to the high 99% accuracy. And suddenly we have a foundation we can stand on. This is extremely important because once we can trust the data, we can start doing different types of business on top of it. And here's one of the places where I believe regulation has definitely helped us, especially here in Denmark. There was this requirement suddenly to do documentation on users who wanted to loan money. You had to actually document the expenses that they had. And that forced us to build budgets based on the transaction data, because otherwise the process for getting this type of insight is a very, very manual process. Most of you probably know this story, right? That like if you want a mortgage, you have to go down to the bank, ask for the mortgage. The first thing they will do is they give you an Excel sheet, send you home, and then you sit there with your home bank on one side and the Excel sheet on the other and start moving data across. There's a lot of friction in that way of operating. If we can get this data available immediately, we suddenly can remove that friction, but we can also communicate with the customer in a completely different way. What we also saw was that we didn't go for really building the PFMs, but we built a lot of tools in the meantime since the PFMs to help customers understand their finances. One I would like to highlight, because I think it indicates some very positive trends, is we as a company are very interested in recurring payments, and you can probably guess why that's important. But we also built solutions for our clients that allows them to see these payments, to let their customers see these payments inside their mobile bank. We have customers that are seeing 70% retention month over month on this. And it indicates two things, I think, that are key here. Customers want support on their finances. they actually, if it is a real pain point for them, if it is something that resonates with their needs, they're interested in it. And the second thing that I think is just as equally important is that they're very happy to have the banks actually help them with that. But at the end of the day, I would say, and you probably also guessed this, that open banking for me, the most significant contribution that it has given us as a financial sector, I don't believe is the openness. It's not the fact that it can be accessed across banks. I think what it really left us with was a much stronger understanding of our own customers' data. Understanding their cash flow, understanding their payments, understanding their savings to some extent, which has allowed us to do a lot of new things. And that's where we see the transition into open finance. It's a little different this time for a couple of reasons. We'll start out probably the same way as last time. There's a lot of work in getting this data. There was one thing that I think overwhelmed a lot of the banks that had to do this, figuring out that it is actually extremely tough and expensive to get the data from the core systems up to a level where you can actually expose this through APIs. That was an overwhelmingly expensive task. This will probably likewise be very expensive. This time it's not only one data source, this time it's numerous data sources. It's insurances, it's mortgages, it's investments, it's pensions, it's everything that you have to get up. Yeah. But I do think that this leaves us with a very interesting opportunity. Because now, before I talked about how I believe PFM has failed, it has not really given us what we expected from that. I still think there is a vision that we should have, that if we can change the way we communicate with customers, if we don't have to give the customers an Excel sheet to take home to fill out data for us to understand their finances, we would be able to do business in completely new ways. And what's so interesting about the open finance side is that this is going to bring in all the wealth perspective that we haven't really had before. So now we're not only left with an understanding of their liquidity, their ability to pay debt, if they have cash on their accounts and what they're paying for. Now we'll also have understanding of their investment depots, etc. And that is a huge opportunity and something I think we need to grasp. I think this would lead to fundamental and profound change in how we communicate with our customers. This time around, there aren't any innovation labs. Every bank basically closed their innovation lab. Funding is extremely hard to get, and I can tell as a fintech, I am not as attractive as I once was. I've gotten older, more mature, but funding is not where that is being deployed. Funding in general is hard to find. I don't think we will see that excitement, that many attempts as trying to build something solid on this. What we will see this time around is a lot of active, mature players out there who has proven that they can work in a vertical way, that they are able to sell something if they focus on one area. And these competitors are born out of the digital space. And just to give you some idea on what it is I'm talking about, we could take an example like Nordnet that everybody knows, right? Who has, since they started out, been extremely successful here in the Nordics. You can also take Klarna. These are companies that focus on one thing, do really, really well. Klarna is everywhere in the customer journey, right? I mean, they are right there where you're buying the things. They have their own card integrated into the payment systems, etc. But to get here, I just want to go back to what I said in the beginning. One of the challenges that we had when we started out with open banking was that the data quality wasn't good enough. And we had to spend significant amount of time building up secondary data sources, building meaning in this. And it's as simple as a mortgage is not a mortgage, right? Every bank has their own little twist on it, their own propositions on why theirs is better than someone else, and there are a lot of tweaks out there. An advisor, a financial advisor down at the bank would be able to understand that, would be able to convey the difference in this to a customer. But if we need to do this from a data perspective, we'd have to build up that understanding. If you look inside your mobile bank today, I think most of you will probably be able to see your mortgage, but your mortgage is probably just a number, a balance that's left with some details that you can go in and fetch, like your interest rate, your payments, monthly payments, etc. There's no description of the asset that's behind it, the property, which is just as important. If you want to have a dialogue with your customers about their wealth, you need to add all these assets as well to have an understanding of it. But it can lead to great things, I believe. AI is, of course, also one of the things that will make this very, very different this time around. We had artificial intelligence back then, but it was the machine learning kind, and it was more used for more rudimentary things like creating data analysis. Today, it's a different beast, right? The AI we see today is interesting, especially from a customer perspective, because, again, here, if we just take a look back into our mobile banks today, they have tabular data. You can go in, you can see a list of your accounts, you can see a list of your transactions, you can maybe see a few graphs here and there. What AI is capable of, what the LLMs are capable of, is convert this into something that's humanly understandable. And it can take up the pieces from the data that is relevant for you, right, as a customer, which is something that has been extremely hard for us to build into the more classical app interfaces in the digital space. AI is able to both identify it and is also able to talk about it in new ways. This is something that we're seeing across the sector right now. Everybody's interested in it, everybody's working on it. Of course, we're all working on it internally right now. It is still a little scary presenting this to customers, but I do think that this would lead to a profound change in how we can interact with our customers, because we can talk about their finances, not with just lists of data, but actually talking to them in the digital space. Why is that relevant? It's relevant because a bank today meets their customer, 5-7 times in a lifetime, right? Down in the branch, but every single day in the mobile bank. AI can definitely change how we communicate, how we initiate dialogue with the customer. And then we can capture them earlier, we can help them earlier. I do also think that AI will change how customers interact with us, and something like open banking and open finance will make this even more powerful for them. I think we will have an experience just like NetDoctor and the doctor's hat, right? Where instead of patients coming in and telling you their symptoms, they're coming in and telling you what they suffer from, and basically just wanting some medicine for that. I have a fun little story from a friend of mine in the financial sector who did an experiment just here recently with AI. He had a colleague that was an investment advisor, and he sat down with this guy, and they played through a customer meeting. They'd also agreed that the investment advisor during that meeting would 3 times come up with something that wasn't super beneficial for the customer. He played the customer, he opened his app before the meeting, told the ChatGPT to remain quiet during the meeting, except if something appeared that was not beneficial to him as a customer. The interesting piece is that every time that something came up, all 3 times, ChatGPT piped up, right, and gave him a response. I think AI will be a powerful ally of the customers. So we can either be the ones providing that, or it will be something that we will encounter going forward, I think. No matter what, I think we will see the same as before, as we did with open banking. Open finance is not, I think there are new use cases here, because this is where the attractive products are. This is, of course, where the mortgage is that we make money on. I said in open banking, there was no business cases. There are a lot of business cases this time around, right? This is where the money is. At the end, though, I do believe that open finance will lead us to have a better understanding of our customers. I will claim that the financial world is not very good at this. They're good at establishing it when a customer comes in and wants a mortgage, but it's a transient thing that we only have for a short while. We don't have that constant understanding of the customer that can allow us to help them day to day. So open finance, I believe, will help us get that full picture. Just a short end to this, looking at the customer side of things. Are the customers interested in this? I think that's an important question as well. I have some hints already that I put up that I do think they are interested. But if we look at the customers that we have today, we already now have the millennials that are using our mobile banks more than anything else. Branches is closing down everywhere. Customers prefer the digital channel. We do also have the Generation C, of course, that's coming in. Digital natives, they're born with an iPad in their hand, right? They prefer the digital over everything. And in just a few years, they will start buying their new houses, their cars. They will be the customer of the future. And here, and I think this is very aligned with some of the other presentations that we've had today. I don't know how readable it is, but the bars up there is from a global survey on Generation C. The main concern that Generation C is sitting around with is the cost of living. The third one is unemployment, right? I think there is definitely a pain out there. There is something that they're concerned about. There's something they're going to encounter that's going to be tough. And finances is a key driver here in helping. And we can, as a financial sector, help them with this part. One other very significant change that I see is happening right now is that where the millennials were more valuing formal educations, we see now that the new Generation C, maybe even some of the millennials, are starting to value on-demand learning more, right? Driven again, of course, by the technology that we have. My boys have always used YouTube to figure stuff out. Now they're using ChatGPT, right? ChatGPT is a cook in my kitchen, so they always use it for figuring out what they can use to replace stuff. This on-demand learning approach is what's expected today. And you can see it in things like the finfluencer movement, right? Where customers today, the Generation C, they are looking for help with this. They're looking for it in ways and in a channel where they can take it when they need it. But they're looking outside the mobile bank right now, outside the financial universe. I think that's an unfortunate process because, of course, the finfluencers cannot, at the end of the day, understand the individual person's finances. They can give good advice in general, and they can probably also do something that is moderately contextual to where you are as a person. But having a full understanding of your financial data and of your financial situation right now, we'd be able to convey such much stronger advice, so much stronger suggestions on how you should use your finances. Finally, I was considering if I should talk just a bit about financial literacy or this one, but I don't think this gets a lot of time in presentations, and I do think this is a key one too. Financial stress is actually a significant thing out there, right? Stress is something we're talking about. It is one of the main drivers for stress is financial concerns. This here is a more international survey, but I found this one actually also from If, the insurance company. They did a survey for 24. They found that 25% of the Nordic population has the main concern for them is the financial situation that they're in. This is at the same time where there is a significant increase in the worry of long-term illness from these customers. And of course, this has real significant impact on us as humans, and it's something that would drive us to look for help. I think the quote down here at the corner that I found in another survey is rather interesting as well, that people would rather speak to strangers about death and sex than about money. There's so much identity in finances. There's a lot of us that has had sleepless nights worrying about one thing or another, and I don't think this is only applicable for people who are not doing well financially. We're all struggling to do better. Finances is a part of our identity. It's something that we use to have success. Right? So in conclusion, I think the digital natives are coming. I do think we have a rather interesting opportunity here with open banking and open finance, allowing us to build this amazing picture of the user's financial situation and using that to help them with their financial realities. If you want to continue the conversation, I'm more than happy. Here's my information. But otherwise, thank you so much for your time and for having me here.
Thanks, Thomas.
Yeah.
Interesting as always. So yeah, let's not just stay up here.
Oh,
Don't leave.
okay.
Don't leave. I would like to continue the dialogue
Yes,
a little
let's
bit.
continue.
And for the first time today, I will actually open up for questions from the floor. So if there's anybody who wants to ask anything related to open banking, open finance to Thomas, you have your chance now. And if not, yeah, there's a question here. Can we get a microphone or so everybody can hear? There will be a microphone now. Yeah. So everybody can hear you.
We will take a microphone. Thomas, question, what is something that you dream of being able to do that you think is just not going to happen? But like that secret thing you don't even dare to tell people because it's too silly, but you want to?
Ha.
In open finance, let's keep it simple.
In open finance. Yeah. I think it would be amazing to have a completely different approach to how we talk to customers about their finances, to have more of a dialogue interface with customers. There are realities. Here's another good example, right? A person, this is a story from London, but it applies everywhere, right? This person making 75,000 pounds a year, if that person doesn't invest, that person will be 800,000 pounds behind their peers who did invest. I'm not saying investment is for everyone, right? But it's hard to understand finances as humans, right? How should we start doing this? How do we want to look at the future as well? I think we have a generation coming in right now that is actually concerned and interested in understanding their future. That's what I get the read from. That's what we see in the numbers. I think we need to change from just showing numbers to start having a dialogue with them in the digital space. Yeah. Thank you.
There's a question down there.
Hi, Thomas. Let's see that. This is very interesting about the learn on demand that we see with our new youngsters who come up. How can we get that feeling into the ones who are already adults?
Yeah. Here is another fact, and that is that this is a Danish survey that found that only 8% of bank customers feel that the bank is reaching out to them when they need help, right? If we understand their finances, there's a lot of things we can see, right? We can see that you're not able to pay your bill next month, and we could help you with that, right? We had the example earlier on that. Things like that. You just inherited money, we can help you with that. You just graduated, we can help you set up a budget for how to start your life as someone who's probably making a salary. By understanding their finances, we can also see the changes, and we can reach out proactively, and we can help them with information here, right? This is going to be very expensive, I have no doubt. That's why it's probably silly, right? Because who wants to invest in that? But if we do that, I think we can have really relevant conversations with our customers and really help them with the finances. Getting better, healthier customers, selling more products to them, because it's not that they don't want the products, right? It's just that today they have to go over to the website of the bank, they have to align these products over there with their financial reality, which they can't really understand, right? It's
Let's see that. Because the youngsters, when you're reaching out to them, they say, hey, this is great, you can help me out, and they're proactive. But when you are reaching out to those more mature, they sometimes tend to think it's an integrity problem. That how on earth would you know that? Why are you calling me with this information?
Yes. Yeah. Absolutely. I think it's extremely important not to be pushy on this one. And I don't think I've heard this idea that you should figure out when your customers are pregnant. I don't think that's a good idea, right? I suggest a more reserved approach to it. But you can show insights. We've actually done this with a lot of our customers, just highlighting this on top of data, that there is opportunities or risks here that you should concern yourself with, but you can dig into it. If you let the customer drive the conversation, I think you're going to get around that problem, right? pushing it through a banner or calling them and saying, you are losing money or you are good at spending, that is not the approach. Yeah.
Thank you very much.
Yeah.
So, any other questions for Thomas while you have the chance? Shoot, Andy.
Yeah, really quick question. Thomas,
Microphone, Andy.
microphone, sorry, should know that. Thomas, when do you expect this to be a reality? Because my understanding is it's still going through the process.
Oh, yeah. 10, 20 years.
Sooner than that.
But here's what's different. I think back when it was open banking, everybody thought about this PFM. I mean, it was very crystal clear what we wanted to do. This time around, it's more diffuse. It's how do we use this data in different use cases? We see a lot of banks actually already working on this. Some are working on it both on a fundamental level, and some are actually also deploying use cases going in this direction. But I think it's going to be a long journey. There's a lot of stuff to be done here, but I think it is a very exciting future that we're moving towards. So I do think 10, 20 years, this is a long-term play, right? This is the financial sector. So I've learned.
And with that,
Yeah.
a big round of applause for Thomas. Thank you very much, Thomas.